Ooh, you like seeing your own faces? I'm going to start right here on our home page because I just want to point out that we've got this availability tab and it's going to show you what states we're live in and what states we are going live in. The blue states are where we'll be going live soon. Word on the street, don't tell underwriting I told you. South Carolina just went live. No, not South Carolina, Georgia just went live. Is it also South Carolina, Jason? I think South Carolina, Georgia, and Kentucky are all going to turn green here pretty soon. Kentucky's got some technical issues that we're working on though.
Also, New Mexico.
Yes, and New Mexico. I like to go skiing up here in Red River, New Mexico. It is quite a bit of fun. So you're going to log in here, and when you log in, they're just going to ask you to put in your username, which is your email address, all lowercase, no spaces, and then your password. Once you do that, it takes you to this page. This is your policy log. It's just like everybody else's policy log. You can search or you can filter. Your insured does have the same view that you have. The only difference is they can't request an endorsement while you can. Um, Quote log is also very similar. You can search, you can filter. I do want to point out that in these filters, all 3 million of them, the ones that I want to draw your attention to are referrals and referred. Anything in referral status means it has not been sent to an underwriter yet. So you want to click in there and hit refer now so that an underwriter will take a look at it for you. If you're not sure about it and you want to chat through it before you refer it over, feel free to reach out. Happy to work with you on that. And then when you see anything over here and referred status, if it's been sitting there for longer than an hour, if you haven't heard from an underwriter inside of like half an hour, go ahead and start reaching out to us. Your referrals shouldn't be sitting, they should be turned around same day, 24 hours. So don't let something sit in referred status for too long. Jason and I are happy to help out with that. I am going to save you the pain of watching me type, and I will go straight into a bindable quote. But before I do, I want to show you here when actually I almost failed to do it. This feature right here is the best feature we have. Our chat feature is backed by a live human, 8 to 5, regardless of time zone, and it's mostly always Jason. Everybody sitting behind that chat feature has underwriting authority. You can chat in and say, hey, what class, what construction, whatever you need, we're here to help you, and we can provide you transcripts of that chat for you to use for your files as well. So just always feel free to hop in here. You're going to get a live human in real time. A member of the insurance team is backing this feature, and we're able to help you out with anything that you need. When you start a new quote, this is your deck page. It's your named insured, location, mailing address, your contact info. If you get everything wrong on this page, that's fine. We can go back and fix it, and pretty soon you'll be able to fix it as well. But it's really important you get the location address correct. We do all of our API underwriting off the location address. So if you get that wrong and you continue through the quote, we will have underwritten the wrong location and you might have to redo that quote. Soon, you'll be able to venture back and make some of these changes yourself. But right now, when you complete this page and you continue, that basic info tab disappears. So I just ask that you're real careful with that location address. Now, as not to watch me type, let's pretend we did all that basic information tab. The next tab is underwriting. Underwriting info is your supplemental application, followed by your 126 and your 140. The 126 and 140 have been digitized, but it is no more, no less your Accord applications. On this page right here, you're going to run into your classification box, which is what you see right now, some master sub questions, some eligibility boxes, and what I love to call tripwires. So in the classification box, we'll write everything from wine bars and above. Everything below wine bars, we will not write. We are not a market for true bars and taverns. We are not writing brew pubs. We're not writing craft beverage distilleries, things like that. And we are not writing mobile food trucks, trailers, or vendors. We're writing wine bars with light cooking and eating, and restaurants of all shapes and sizes, whether it be a coffee shop, a deli, or a bar and grill. Just because it says Morgan's Dive Bar and Grill does not mean that it is a bar. Please do not classify it as a bar unless you're prepared to get a decline on that. We look at things from a standpoint of if it closes by midnight and has no more than 65% alcohol sales, it's a restaurant. So use one of these restaurant classes. In most cases, it's going to be a casual dining restaurant. Soon, but not now, you will have the option to do 5 locations on one policy. If you have a multi-location risk that is 5 or more locations, let us know. We're happy to take a look at it for you. It's something that we might have to do on the back end. Otherwise, right now, you are welcome to do a quote per location, and we'll go in and we'll underwrite and price that based on an account basis. The upside of that is that your insured does not have to share limits across locations. This is how we're collecting your loss history. We're not asking for accords. We're not asking for loss runs. We're asking you, have there been any claims? We only go back 3 years. You have authority for 1 claim up to 50,000. If you've got 2 claims, then it's going to generate a referral. Be prepared to provide the story or the loss runs and an understanding to the underwriter as to what happened with that loss history. This is your select no to all on the Accord application. The one thing I want to point out is this non-renewal cancellation deal, this question right here, this does not pertain to cancellation for non-payment or for a carrier pulling out of a market. What we're looking for is to identify people who have been non-renewed for cause. If they've had frequency and losses, if they've had severity losses, that's okay. Let's talk about the story. But ultimately, we've had a lot of people click this button because they're dealing with non-renewals from other carriers. If they're just pulling out of the class or the market or the state, that's not what we're looking for. You can omit that. This is a master sub question. We're just saying, okay, correct. Great. They got stairs. We're okay with stairs, but here are the standard operating procedures we'd like for them to follow for those stairs. This is our eligibility box. Anything that's an eligibility box, if you click anything other than none of the above, is going to catch you a decline or a referral. A couple of things I want to draw your attention to on this. If you know it's going to generate a referral, I might just go ahead and chat in or reach out and let us pre-clear it for you. Also, guys, just so you know, I'm happy to walk through your first quote together. Even the binds, there have been many a nights I've sat up and helped agents walk through their first bind. It's kind of scary the first time, but then it's all downhill from there. Happy hour, 8 to close. That's called reverse happy hour. That means we're binge drinking after 8 o'clock. That's going to be a hard no. But alcoholic drink specials under $4, if it's like a domestic beer for $3, that's not a big deal. But if it's bottomless mimosas for $2 or $3, that's going to be a different ball game. So we're just trying to identify, are there aggressive drink specials that are going to promote heavy drinking? We do entertainment. We do light entertainment. If you got a singer-songwriter, acoustic band, maybe up to 3 people in a band, no big deal. We're happy to rate that. But once you have, you know, a solid rock band up there on stage and it starts becoming more of an entertainment venue, that's where we're going to start pulling away from that exposure. But light entertainment's not a problem. And I don't care what anybody says, karaoke is not live entertainment. Dance floors are going to generate a referral. They're not always a decline. If somebody's just pushing some tables and chairs back every once in a while, that doesn't make it really a dance floor. We're looking to address dedicated dance floors, things raised floors, maybe some railings around the floor, and be prepared to address that patrons are not permitted to bring drinks onto the dance floor. That's like a recipe for disaster. This is another master sub questions. We're super cool with playgrounds, no problem at all. We just want to make sure that they're not the type of playgrounds that I played on as a child, nothing that's going to provide third-degree burns, scrapes, pinches, you know, kids jumping off of third-story rocket ships, things like that. Again, we're not a market for mobile food trucks, trailers are vendors. We are doubling down on that by providing you this eligibility box. The one thing in this box we will write is a ghost kitchen. It's going to generate a referral. And we're just going to ask you, hey, what does that, contract transfer look like between the person who owns the space versus the person leasing the space? Which brings us to our tripwires. We follow a very common sense approach to underwriting. The NFPA says that, which is what all local ordinances follow. They say that if you have 300 max capacity, you are not required to have a fire alarm. So if the fire department goes out there to your new venture and they say, hey guys, you've got 150 or 300 max capacity due to the size of your space, and you've got no alarm, they're going to sign off. They're going to say, no problem, you can go ahead and open to the public. If they say you've got 500 or more in max capacity and you have no fire alarm, they're not going to let you open your business. So if you've said no alarm, and then at the bottom where we ask you your max capacity, you say that you have over 300, you're going to catch a decline. But it's not because they're not eligible. It's because the question was probably answered incorrectly. We do have a cheat sheet we can provide on that NFPA stuff, though. Anything above local central station alarm and UL certified, that's going to generate credit. It will also trigger a protective safeguard. So make sure that if you're applying that credit, that you know that they do have that central station alarm, because that's going to be an awkward conversation when a claim comes up. So the burglar alarm and the recording devices, these are not eligibility. These are areas where we can negotiate higher crime scores and where we can start applying credit. If they do have recording devices and alarms, then we are going to provide some type of credit. 6 deep fat fryers. We will write up to 6. This is a legacy farmers question. We have not seen any with more than 6 deep fat fryers. It's pretty excessive. If you find one, go ahead and pre-clear that with us. We might consider it for you. This is our last tripwire. The NFPA says that if you have wok cooking, you must clean your hoods and vents quarterly. If you have solid fuel cooking, you must clean your hoods and vents monthly. Again, I'll give you a cheat sheet on this. Everything in that box, all types of cooking, we will write. Hibachi grill, write it. Tableside cooking, no problem. Solid fuel, like the barbecue joints that cook inside, the wood fire pizza ovens inside, all those things, we're happy to write it. They just have to follow standard operating procedures. If you have a new venture and they are struggling to understand why they need a builder's risk policy, if they have maybe up to 3 months worth of work to do and it's all pretty light, think like slapping some paint on the walls, moving in furniture, installing equipment, maybe some light updates on the electrical, we will write it. You can say yes here and then come, oh, look at that. That's a new feature I love. So if you say yes, that you have some light renovations, as long as they qualify with all of these guidelines here, then you can go ahead and pass go. You can collect $200 and we'll get on that insured without them having to get a builder's risk policy. Kudos to Andrew, one of our underwriting guys. He does all the technology. That makes me happy. I'm going to give him a shout out for it. Under no circumstances will we do cash only establishments. Sorry. We will do up to 250 employees per location. We are looking for operations that stay open up to 18 hours a day. If you've got anything exceeding 18 hours a day, if they're 24-hour operations, if they're staying open past midnight, that's going to require an exception. It doesn't mean it's a decline. Everything's negotiable. Just be sure to reach out to me or Jason or one of our underwriting staffs at underwriting@userainbow.com to have something like that pre-cleared. We will rate new ventures. We just require that they have 3 years experience. And then here's your handy dandy maximum occupancy. If you don't know the occupancy, that cheat sheet that we're going to pass out to you, that will kind of give you a good way to estimate those numbers. We will do up to $10 million in gross annual sales. This is per location, guys. If you've got 5 locations on the policy, we'll do 10 mil per location, 250 employees per location. You've got authority for 1 mil, 2 mil, and liability. 2-4 is going to catch you a referral. They're going to ask you, does the insured currently carry higher limits, or are they contractually required to carry higher limits? If yes, to either, we will approve that 2-4. We're doing this temporarily, and that will be replaced with up to $5 million in excess. So as we start to roll out our excess product, you'll see that these higher limits are going to be replaced with excess limits. We are cool with catering. We'll do up to 100% catering. We don't mind anything that's more than incidental. And I think incidental is around 15%, but anything more than incidental will make the insured ineligible for hired non-owned. If it's just some light incidental catering, that's no problem. We love establishment with alcohol sales. We'll do up to 65% alcohol sales. Anything that you quote over 30 to 35% is going to catch you a referral, but it should be turned around immediately. And then we'll do up to $1 million per occurrence on your liquor liability limits. The general aggregate on the liquor liability, and it is its own coverage, it's not built into the GL, it's going to depend on the state. If the state mandates a higher general aggregate, then we'll follow the state mandate. Otherwise, it's going to be 1 million, 1 million. We are happy to offer hired non-owned. We'll do up to 1 million. We just will not offer hired non-owned for caterers that have excessive delivery and for operations who are advertising that they have intentional self-delivery. Third-party delivery, no problem. Robotic delivery, hard no. And then here's your 140. We're going to ask you, what's the construction of the building, the year built, the area, the updates, all the jazz, right? If you're not sure what construction to use, chat in, because we will take a look at it online. We'll help you determine what construction to rate it as. Based on the year it was constructed, it's going to open up these updates. If it was built over 25 years ago, we're going to ask you roof, plumbing, and electrical. Plumbing and electrical have to have been updated in the last 25 years. The roof will have to have been updated in the last 20 to 25 years based on the material. A shingle roof will need to have been updated in 20, but a metal roof with a longer lifespan will allow that to go as far as 25 years. There is credit for sprinklers. Make sure that they're 100% sprinklered and know that it will generate a protective safeguard. That also does apply credit, by the way. And then we've got our BPP limits. You've got the option to add building or tenants improvements. Now, this gets a little tricky. If you want to add the building, you can come in here and you can put a limit in there for the building. Guys, we will write older buildings. We will write an older frame unsprinklered building. Now, there might be some limitation as to how much of the limit we're willing to provide you, but we will write those exposures so long as those buildings have been updated. If you do not want to cover the building and you know what the TBI is, then you can come in here and you can say, I want 100,000 in betterments and improvements, and we're going to do just 500,000 in BPP. In every state but the state of Texas, there is a rate relief for you to separate the improvements from the BPP. If you're in Texas, if your client's in Texas, or you don't know what that improvement limit should be, select 0 and we'll put that it's included on all of the documentation. Select whatever AOP deductible your heart desires. We are perfectly fine with all of those, but not wind hell. Wind hell is going to pre-select, and wherever it pre-selects, that's the minimum you can offer. So if it pre-selects at 2, you cannot go to 1. You can go to 5, you can remove it. Would be happy if you remove the wind hell coverage, but you cannot go lower. So be mindful of that pre-selection. If you need to negotiate lower wind hell deductibles or a flat deductible, it's probably not going to happen if we're on the building, but if we're not on the building, that's reasonably, that's reasonable enough to try and negotiate. It will require that you refer it to the underwriter though, and I'll show you where you can do that. We just want to identify the type of building. We will write all of these types of buildings. The only one that I want to draw your attention to is habitational. If you've got a building where there's an apartment on top and a restaurant on the bottom, as long as the owner or general manager resides in the apartment or there's an adequate firewall between the two, it is eligible. And you'll see that here. You get 2 questions. If they live there, you get to pass go. If they don't live there, we're just going to confirm that there's adequate firewall. And then you get to continue and they are eligible. Optional coverage is my favorite.
Hey, Brandi.
Yep.
I just wanted to go back because we had a question from Robert, which you, I think, sort of just touched on, but just to make sure. Robert asked if the restaurant owns the building as well and there are multiple occupants in the building, can we include building coverage?
That's one that you want to clear by the underwriter, but in general, yes. Now, what we won't do is extend to any type of LRO exposure. We'll write the restaurant, we'll write the building, but we will not extend to LRO exposure. But in the situation where there's multiple occupancy, we might want to go ahead and identify what are those other occupancy types. It's best to be on the up and up with that. I've seen that come up. We have written them, but we've never extended to the LRO liability exposure. Good question, by the way. So if you hit this view packages button, it's going to give you the primary. This is all standard ISO BOP, guys. Here's the primary policy form. Here's the beautiful thing that happens when you add the premier endorsement. The most important thing, in my opinion, of what happens when you add this premier is we remove the waiting period on the BI. That means we have 18 months ALS with no waiting period. We pay on first dollar loss. That's a huge competitive advantage on coverage for you guys because a lot of carriers don't do that. And most restaurants have all felt the pain of the business going down and them getting it back up and running inside of 2 or 3 days. So they were just out all that income. So there is a true pain point there. It is a very relevant coverage that I would certainly use to sell on. Furthermore, anything that says it's customizable, you can go in and you can customize that. So if you said a backup of sewer and drains, it is not included in the base policy form. If you enhance the policy, you can increase that limit. If you chose not to include the enhancement endorsement, you can actually add those coverages a la carte. I'll show you how that works. Yes, I do want the enhancement. No, I do not want to increase the wine collection. Down here where it says, do you want to customize anything? If you select yes, you can come in and you can say, yes, I want to increase backup of sewer and drains to 25,000 because I'm up against CNA and I know that's what limits they carry. True story. Or you can say, I do not want the enhancement endorsement, but my E&O carrier absolutely wants me to make sure that they have equipment breakdown and backup of sewer and drains. At that point, you're adding a coverage that otherwise would not have been available. We do offer $1 million in cyber and $1 million up to $1 million EPLI. There's several limits here that you can choose from, actually. And then we also give you several limits and deductibles to choose from for the EPLI. This is HSB, guys. It is true EPLI and cyber form. This isn't some fun little throw in that you see a lot of carriers do with their enhancement endorsements. It's a true coverage form. The EPLI, by the way, does include third party, which is a big deal for restaurants. It does not include wage and hour, though, which would be an even bigger deal. But that's a scary thing to include for restaurants. Blanket, all AIs are free. Our blanket AI and waiver, you guys should slap that on everything that you quote. It's free of charge. If you're not sure if you need a scheduled endorsement, go ahead, add the blanket AI, and we can come back and endorse the scheduled later. And you can rest assured that you're not going to have to go back to your client and say that there's an additional premium. Discounts tab. This is the fun tab. So in every state but California, we have up to 40% IRPM. That's a scheduled credit or debit. We can go over under the base rate. In California, they only give us 25. In addition to that IRPM, we've got 15% in credits or discounts that we can apply. There's a 5% discount for anybody who's a member of an association, a 5% discount for anybody who maintains a Google or Yelp profile, and a 5% discount for a franchise. You can't just make up some random franchise like I did here. We're going to want to know who the franchise is. So then after that, you have the ability to continue to add more credit. Each of these points right here total 20%. They're all 5% credit each. So you guys, there's a lot of credit here. We can get competitive on an account when the account is going above and beyond the average Call of Duty. If they're just a standard restaurant and they're not going above and beyond, then they're probably not going to qualify for some of these things. So just be mindful of that. If you know it's going to generate a referral, if you know it might generate a decline, if you know you're going to need more pricing, anything like that, if you want to refer this to have an underwriter look at it and work the account for you, select yes here. And then provide the target pricing, provide the story behind the losses, whatever it is, provide the narrative to your underwriter, because that's the first thing that they'll see, and they'll be able to work on it and get it turned around to you quicker instead of playing that volleyball game back and forth, asking a bunch of questions.
Hey,
You can,
Brandi. We had a question from Robert about umbrella, which we do not offer technically, but we do offer excess. So I didn't know if you wanted to quickly touch on that.
we are rolling out excess form as we speak. So in the meantime, we've got the higher primary limits. We will not do umbrella. It's a true excess follow form. So you'll have, soon you'll have up to $5 million in excess coverage. But it's not available just yet. Some states have approved it, so it's available in some states, and we're working on building out that technology. If you run into a situation in like Arizona or Michigan or Texas where it's live and you do need an umbrella, let me know. But if you select that 2-4 limit, and an underwriter will also see that, and if they know it's available or they have the ability to offer it at that time, they'll try to offer you the excess in lieu of the primary limits. You can quote and bind effective today. If something comes up and you need a back date, don't worry. Just like chat into Jason, let one of us know, hey, we got to get this backdated, and we will go in, we'll work the account, we'll work our magic on the back end, and we will give you authority to go ahead and get that backdated. Now, if it's more than a day or two, be prepared to offer that no loss letter to underwriting. But you know, something within reason, let's say 7 to 10 days, something like that, we should be able to backdate that. But when you start pushing up past that level of time frame, it's going to be a lot harder, and we are going to have the carrier sign off on it. So be prepared to give a narrative as to why we need to backdate it. In all states but California, we can offer a 5% discount for pay in full. We obviously have the pay monthly, just like everybody else. What we do differently is the pay as you go. This is monthly reporting, just like what you're seeing with work comp. We will essentially issue the policy, no down payment. At the end of each month, they will turn in a sales report to us. We will adjust their premium based on actual exposures. And then what happens is we eliminate their final audit. So now they're not paying high fixed premiums during low yielding months. They're not dealing with the ever hated final audit. And when you're moving somebody over from a policy that's just been audited, in most cases, they're looking at paying an additional premium in the same month as a down payment. That is hard on them and their cash flow. So they're going to be happy to know that they don't have two payments and you can just move them over without having to have a down payment. If after the first month they're like, no, I'm not doing it, I'm not turning in the report, we're not going to fight with them. We're not going to fight with you. Everything's fine. We're just going to push them on over here to pay monthly. But what happens is, since they didn't make a down payment, they're 1 month behind. So they will have to make their down payment and their first installment if they choose not to turn in that report. So keep that in mind. One other thing that we do is everything is auto pay. So to issue the policy, you do have to post a payment, either ACH or credit card. So when we issue something on pay as you go, we will hold that payment info with a 50-cent charge. I'll show you what that looks like in just a second. So we're coming to the summary page. It's high-level overview, pretty self-explanatory. When you see this blue box right here that says Rainbow Rewards, we're saying that if you upload five photos, we will discount this policy by $507. You can do that by hitting Apply Savings. We give you an example of each of the photos. And here you can share this with your insured and they can upload the photos and continue to purchase the policy. You can also share the quote with them here. This is the same feature. What happens is they get an email from us and they're like, hey, your agent Johnny over there created a quote for you. Log into this account and you'll have access to it. And it'll take them right here to the summary page. They will not be able to go above summary or make any changes. They can download their quote, they can upload their photos, they can purchase their policy, but that's the only thing they'll be permitted to do. Let me download this bad boy real quick. Okay. Real quick, when you go to purchase a policy, you've got these disclosures that you've got to select. Those are all included in the quote. And then when you hit proceed with payment, you'll see that for the pay-as-you-go plan, we're just going to hold the payment information by posting that 50-cent payment. And then that 50 cents will be debited from their first payment that we pull when that report comes in. This is the most extensive quote that you have ever seen. If you've seen one more extensive, I'd like to know. It's 35 pages. You are welcome to slap your logo on that. We love co-branding any chance you get. You'll notice that this here does not mention the savings. So you might want to jot down that, whatever the savings was, I already forgot $500,000 that we saved them for 5 photos. And then here, if the coverage is available, it'll say included, not included, or it'll provide a limit. If it generates a single dollar in premium, we'll line item that. We try to be very transparent. One thing I didn't touch on that I'd like to draw your attention to is assault and battery. We are not silent. We include assault and battery up to 50% alcohol sales. Once you go over 50% alcohol sales, we're going to exclude that, but we'll let you buy it back all the way up to the policy limits. If you did customize the enhancement endorsement, what's going to happen is, let's pretend like backup of sewer and drains. If you added the enhancement, this would say 5,000 and this would say included. If you enhanced it to 15,000, it would say 15,000 here and it would say $10 here. And all we're doing is showing you what the premium is associated with that extra limit that you've quoted for your client. We're very important. We try to be very transparent. So we did put the protective safeguards right up above the premium because we know everybody's eyes are going straight to the premium. We're gonna let you know and give you the ability to really present to your client the amount of money you negotiated in savings. But what I want to draw your attention to is that this is very confusing and is not conducive to an agency management system. The only pure commissionable premium you see here is the $77.43. This number right here is not a total advance premium because it includes estimated fees. This is a total estimated annual expense. This $265 is very fluid. It is assuming that your insured is going to pay monthly by credit card. So it is the total of 1 flat policy fee, 11 installment fees, and 11 credit card fees. Anything could change that. If your insured pays in full, it changes. If they choose to do ACH, they have no credit card fees, it changes. If they do pay-as-you-go and their monthly payments ebb and flow, well, so do their credit card installments or their credit card fees. So you guys put this in your system however you want to, but this is not going to be the same fee, isn't always going to be the same fee at the end of the policy as it was when you first quoted it. This is your only pure premium that you will be receiving commission off of. Your accounting team cares about none of this. They only care about what's highlighted here in blue. Here's a breakdown of the fees. And every policy form, there's no surprises there. We do give you a complete overview of every payment plan available to your client, and we try to give them an understanding of what their monthly estimated expenses might be as well. I do believe these, yep, it does. These include all fees. So you can say, hey, if you pay by credit card each month, you can expect to pay this much. And then you've got 7 million disclosures right here. They're all there for you. This is the kitchen sink, the whole toolbox. Use whichever one you want. And then we do give you the ability to get a payment authorization form since you will potentially be collecting credit card or sensitive payment information. We're not asking for this in return. This is just a little CYA for you and your files. It's up to you as to whether or not you want to use it. And that is followed by a completed application. So anything that you've done to get the quote will be indicated here on the application, and we do allow you to get it signed. Again, entirely up to you. We're not, once we've turned a bindable quote around you, unless we've made some pretty extensive exceptions and added binding subjectivities to those exceptions, you shouldn't be hearing back from us on, hey, we need a signed app, or you got 10 days to get me these binding subjectivities. We try to be one and done on those things.
Brandi, we got a question here from Cindy asking about, is outside financing allowed?
Outside financing is not allowed. We are direct bill only. If and when we go to agency bill, that will probably change, but for the time being and for the foreseeable future, we are direct bill auto pay only. That's a great question. We had somebody who issued it pay in full, put their own agency money up, and then financed it, and that what was not a great scenario for them. Do you guys have any other questions? Do you have anything around underwriting thought process? What will we write? What's negotiable, coverages, selling points, anything like that? Or is there something in the platform that I could go back to show you? We got a few more minutes left. You guys want to TikTok for a little while? Whenever we wrap up here, Morgan, I'm sure will send over a video of the of this demo. All of our direct contact will be in there. There's lots of resources available to you. In fact, what I didn't show you is when you go back to the dashboard here underneath resources, Morgan has done a really good job of really providing as many resources as we can. This agent FAQ is constantly updated. When you download that, you can control F to find your answer here, but it's a Word doc and it's routinely updated. So I wouldn't save it to your desktop. I would just refer to it from here. And then there's a lot of co-brandable resources that you can offer your clients here. And then they also put together a really good SEO strategy. We've got a lot of organic business coming to our website, and it's all because of Morgan's brainchild around this SEO strategy. If you guys want to, if you are not already marketing to restaurants, you really want to create a niche and you want to drive organic traffic to your website, I would highly encourage you download that right there, because you'd pay people a lot of money to give you what Morgan's created for free for you.
Thanks, Brandi. We had a question from Ureli that I think Corinna also addressed that I forgot to bring up earlier, but just asking about California with high wildfire zones, what the thought process is around in terms of underwriting that.
Yeah, we try to take a very common sense approach to underwriting. So what we do is we actually have a scoring system, and it's the same thing with hurricanes. So if we got anybody from Texas, especially in the Houston area here, same deal. We've got an A, B, C, D, F scoring, just like back in our old school days, right? If something is a C, B, or an A, it's going to get approved. We're going to write it. You get to get your quote and move on. A D is going to throw a referral. An F might throw a referral or a decline. We look at all of those, And if in the case of a wildfire, if you look at a location and it's butted up right against the forest, and they're going to be first line when the fire starts and they've got no water protection and they're not near a fire department, that's going to be a decline. If it's a little bit closer to the center of town, they're close to the responding fire department, maybe they're sprinklered and they've got some, fire alarms, then that's when we're going to start making exceptions. We always want to understand the story. We want to look at the situation and make a reasonable human decision on our underwriting. So we don't rely 100% on the scoring. That just kind of sets the tone for when we need to go take a peek at something and determine if an exception needs to be made.
Thanks, Brandy. And then we have two other questions that came in. So Cindy asked, do you write monoline on any lines? And then Emily has an underwriting question about a business that has a separate restaurant, but it's also a wedding venue and bed and breakfast. Would the restaurant be part of our appetite?
That place sounds cool. No, we don't do monoline coverages yet. We're purely a BOP. And then when we offer up the umbrella, or the excess, that will be over our BOP. We won't be offering monoline excess. The other question would be totally on a case by case basis. We have made an exception before, but the thing about the exception was that the B&B, that the lodging portion was the lodging and the entertainment venue portion was underneath its own entity. So we wrote the restaurant. We did not write the exposure for the lodging and for the event venue. Now
Emily just said it's under a different corporation.
they
Like,
are.
yeah.
Yeah, I would say send it our way. Let's take a peek at it. It's worth trying to pre-clear it and see if we can get it through the system.
Emily said groovy, which I love that,
I love that, Emily.
Emily.
I think our background is groovy.
It's true. All right, well, I think that we haven't gotten another question in a few minutes, so I think that that is a great time to wrap up. But again, if anyone has any other questions, you can chat in, you will get Jason, or you can email in and we can definitely get you an answer right away. So yeah, thank you all so much for joining. Thank you, Brandi and Jason yeah, Jason was just chilling this time. So thank you, Brandi, for running this webinar, answering everyone's questions. Yes, Emily, I'll be including that cheat sheet with the email.
It's a good one. Cool,
Uh,
guys. Well, I look forward to doing some business with you guys. And again, if you want to walk through your first submission together, feel free to reach out. I'm happy to help you do that. We'll share screens. We'll have a picnic. It'll be a good old time. Maybe we can do it over mimosas one day. See you guys.
Hi,
Bye. Thank you,
everyone.
everyone.